This is Golden Rule Radio. We have gold about flat, silver down just a bit, the dollar above 90, and today is a historic day, I think. You know why? Any of you know why?
Is it platinum related?
Has to be platinum related because that's the next one on our list here. So platinum divided by gold is pushing down to a level that it's only touched one other day in history. I think it was like September 21st, 1982, but who's counting? So platinum at 0.68 relative to gold, that's historic. And is the market paying attention to this? Are people paying attention to this? I don't know. We'll see, because that is, I guess, a previous low with the ratio. So does it hold? Does it keep going lower? Whatever the case, it is at a historic level right now at 0.68, platinum divided by gold.
Well, arguably, if it's that low, how could the market be paying attention to that?
It's not as exciting as the equities markets, that's why. But really, that ratio is exactly what we steer people to. And we've already started to see supply issues in platinum, some delays on shipping. So from a physical standpoint, it's great to see the spot price drop. From a physical standpoint, usually that market leads in terms of availability. So yeah, a lot of pressure on platinum.
So getting into the gold charts here, like you said, we have been flat, although we have been bouncing up and down because we keep testing those previous highs in the mid 1300s. If you extend this chart back out over the last couple years, we're definitely pushing up and compressing up, and we're moving into that 1360, 1375 mark. It's only a matter of time till we get past it, and then we start looking at where that next landing point is going to be up in the 1400s. So we've had some slowdown. Obviously, we had a great December, great January. Things are going to pause for a while. We'll have another couple great months. Things will pause for a while. I think the real question is, why are things pausing for a while? I mean, that's what we've all been talking about for the last few weeks, from tariffs to interest rates, the US dollar moving, what the equity market's doing. So I'd say hold fast to gold. Gold is doing what it's supposed to be doing in these type of confusing markets. And as we push past this level, we'll be looking back someday going, hey, remember when gold was stuck in the 1300s for a few weeks?
Just like we did when gold was stuck in the 1200s last year,
and the 1100s the year before that.
That's right. And before you get into the white metal charts, I think it's important to point out that they are down more substantially than gold today. You're asking why there's a pause. There's a pause partially because of the US dollar. We've seen just a little bit of an uptick, but the white metals are sort of indicative of the commodities markets in general. We really need inflation to take off. The gold-silver ratio has actually increased to 82. So Robert's talking about the platinum to gold ratio. Well, what about the platinum palladium and the other ratios? But that gold-silver ratio at 82 is getting very, very strong.
Looking at the silver chart, Miles, what do we have?
Well, we're still in the same compressing pennant we've been in for the last 2 years, I guess, now at this point. Obviously, the longer this goes on, the tighter that's going to get. We actually have a smaller compressing pennant with some outliers outside of it that it breaks out of from time to time, but I still think we're looking at a pretty solid floor in the 1550 mark. Anything that stays above 16 in the short run obviously is bullish. I mean, again, this is another chart that is pretty much guaranteed to push the price up eventually. The question is never what's a market going to do. The question is always when is it going to do it. So, and I think silver is the perfect example here.
I think when depends on what the US dollar is doing. The dollar index is just above 90. Probably has some room to rally, wouldn't you say, into 91, 92 before it hits that downward trending support line. And so if the dollar does try to push up from here, then wouldn't be surprised to see a little bit of weakness to those white metals.
And potentially even gold, right? I mean, it doesn't have to only affect the white metals. A little bit of weakness in gold if it's doing what it's supposed to do, and a little bit of weakness in oil as well. We've talked a lot about oil the last 2 weeks, and it's actually down 4% from last week, but still looking very bullish. It too has an inverse relationship like gold has with the US dollar.
Well, China's taking its first steps in paying for imported crude in yuan instead of US dollars. Now, that's something a lot of news outlets have been talking about for years, but this does minimize or continue to minimize the US dollar's impact in the markets over in the second largest economy in the world, and further tie China to other nations like India, like the Middle East, outside of having to go through the back door that has been OPEC and the U.S. dollar.
Yeah, that U.S. dollar, also named the petrodollar because all oil has been traded through that world reserve currency, is going to take a beating here. And this isn't something that is going to be 2 or 3 years down the road. They've got a pilot program that's launching as early as the second half of this year. And to me, I think there's a direct correlation here. Every time we see somebody come against the U.S. dollar and its dominance, something geopolitical ends up happening, right? I mean, we saw it with Iran. We saw it with Saddam Hussein in Iraq. We saw it with Gaddafi in Libya. Yeah, and is that correlated to these tariff battles going on now? You know, and the shots that are going back and forth between the U.S. and China? I don't know. That's hypothetical, theoretical, but just throwing that out there.
Moving to the equities market, I think we may have another historic day because it looks like the equities were down early this morning, big time, kind of pushing below a major support level, and they were rescued, I'd say. They're going to finish the day up strong, and frankly, I wouldn't be surprised to see a rally in the equities market. It seems like there has been some defensive position with those support levels, and so I wouldn't be surprised to see it rally and surprise a lot of people.
Wouldn't surprise me either. It's acting a little bit like the precious metals, you know, that they're holding some support levels, and it might catch people by surprise. And just because it does rally, Robert, I think you would agree, does not mean that it's going to be a sustained rally. We might set new highs, right? What we are having is a lot of uncertainty, instability, confusion, and that's lending a lot of support into the metals as a nice safety position or hedge. But yeah, the equities markets, to me, wouldn't surprise me a bit either to see a little bit of a significant bounce. So we don't just cover the metals in here. We try to cover other markets and news that impact the metals. So everything correlates to the metals. But I think this week, you know, it's important for us to talk on geopolitics and, you know, news, monetary policy, central bank, debt issues. There's a lot going on. So let's just try to fly through it real fast.
So politically, we have 3 hot topics. I mean, you've got the primaries coming up here later this year. In fact, I think that we've all at least seen one advertisement already, a little bit early perhaps, but perhaps not. Obviously, immigration continues to be a big issue, the building of the wall, and what's going on there, the amount of money being spent compared to the cost of illegal immigration to the country on an annual basis anyway. And then finally, gun control continues to be a huge debate here in the U.S. So these are pretty polarizing topics. You know, we're not talking about some simplistic political ideas here. These are the types of things that break up communities and start fistfights at Christmas dinner.
Yeah. You know, before you leave politics too, Miles, Trump hit a 50% approval rating in a Rasmussen poll, so there's a little bit of stability. That actually is despite, too, the tariff war that is going back and forth. And as we talk about monetary policy, tariffs are actually going to play a role in that. We fire a shot across the bow, tariffs come back our direction from China, small, you know, a little bit, $3 billion impact. And then we thought we were all good, and then they come back to a larger extent. Again, does this have something to do with the yuan versus petrodollar? I don't know, but make no mistake about the fact that China's getting desperate. Their economy is far more dependent upon ours than ours is on theirs, and expect prices to climb here. We will see inflation hit Main Street.
Yeah, but compare the economic impact of a $3 billion tariff to, say, the debt impact of printing $85 billion a month, which is what we were doing a few years ago, and continue to print money today, although not quite to those same TARP levels. We're still continuing to devalue our currency. We're still continuing to inflate the prices and the cost of living, the way that's adjusting for people here in the U.S. I mean, we're expected to climb another 10 trillion by what, 2023?
10 trillion. I mean, what are they doing to our grandchildren? What are they doing to us?
Well, and it's not just them. We, the citizens of this country, are now sitting on about $1 trillion in credit card debt.
Debt really, to me, is the main domino. Okay, when everything comes home to roost, it's going to be debt. Just like what we saw in 2008. There's clearly no lessons learned here either, because now we see subprime mortgages making a rally. they're doubled in the last year, right? So now they're calling them non-qualified mortgages just to try to change
Right.
the
You have
name.
to change the name every year or two, just like we did with quantitative easing a few years ago.
Yeah, that's right. Money printing. So yeah, I mean, doubled in the last year, and now they're on pace to double again. Here's banks doing exactly what they did to get us into the mess that finally crumbled in 2008. So, monetary policy wise, again, all of these things are linked.
All that makes me feel like is that you're not necessarily in control of your own destiny in a lot of those situations. And what you are in control of is your own personal family. If you're the head of a household, you have decisions you can make on a daily basis to lead your own family and maybe some others around you. You have decisions you can make with your own finances that you can put yourself in a good position to benefit from what's going on. And so those crises can equal opportunity. That's what I think we're talking about on the show. And so if you want to talk to us individually, call us 800-525-9556. You can follow us on Twitter at ICA Gold, or click the subscribe button below if you like what you hear. Thanks for listening. Have a good week.